Hi everyone, very good afternoon and welcome back to CGBMentors. So in this particular class, we are going to discuss few more circulars of April month, right? These are important circulars and we'll try to explain this in as simple a manner as we can. So let us start, right? So number one, the topic that we have is there is a clarification and procedural changes to aid and strengthen ESG रेटिंग प्रोवाइडर्स. ठीक है, अब ये ESG रेटिंग प्रोवाइडर्स क्या हैं और इसके रिलेटेड क्या रूल है, लेट अस अंडरस्टैंड दैट, राइट. सो सेबी इंश्योर्ड दैट टॉप 1000 listed companies which are there on the stock exchanges, they have a responsibility, right? What kind of responsibility do they have? That their business should be carried out in a sustainable manner as well as in a responsible manner, right? So they have to come out with the BRSR report. BRSR, business responsibility and sustainability reporting. अब इसमें आपको क्या कहा जाता है? That how your structure is, right? What are your corporate social responsibility related fulfillment? How gender diversity prevails in your organization? How ethics prevail in your organization, right? So all these information an organization has to tell. Now suppose you have told me something, right? So we have a company, let's say Infosys, or let's not use the name, let's say a company A. Okay, so this company has submitted us a report, that is a BRSR report, that this is how our company is sustainable, responsible, etc, etc. So I'll say that no, let me check this, right? I would like to check it. So we have credit rating agencies, as you would have studied it, right? What credit rating agencies do? They study this report and provide ESG ratings to these organizations. ESG rating means, are you environmentally, socially and governance wise you are fulfilling the requirements or not? क्या आप requirements को fulfill कर रहे हैं या फिर नहीं कर रहे हैं? That is how we provide the ESG ratings. Got the point? Now over here there are two models, correct? Suppose there is a mutual fund. ठीक है, एक बात करते हैं that there is a mutual fund and this mutual fund wants to invest in the company A. I repeat it again, that there is a mutual fund who wants to invest in company A. So this mutual fund pays the money to credit rating agency. I repeat, there is a mutual fund which wants to invest in company A and it pays money to the credit rating agency that please rate this company on my behalf. So what kind of model this is? Subscriber pays model. ठीक है, किस तरीके का मॉडल है ये? Subscriber pays model. When there is a mutual fund organization who wants to invest in this company, pays the money to credit rating agency to get the ESG rating, so that in the business in which this mutual fund is investing is an environmentally responsible business or not. This is a subscriber pays model. Then we have another model where this company who wants to come up with some bond issuance, right? Or in general this company wants to have a credit rating, ESG rating. For example, let's say TCS wants to have a ESG rating. Let's say Infosys wants to have an ESG rating. So this is called as issuer pays model, where the company itself pays to the credit rating agency, right, to the credit rating agency to get the ESG rating लेने के लिए. So I hope you would have understood it. There are two models. Now अब clarification किस बारे में आया है? Suppose I have a credit rating agency, CRISIL, ICRA, right, or CARE, or S&P Global, etc, etc. These are the credit rating agencies, both international as well as the national. So my credit rating agency has given an ESG rating to company A. Okay, but now I have read some information or I have got some information which I was not having access to earlier, right? So I was not having access to that kind of information. Now, once I have read that information, I would like to withdraw my rating. I no longer want to rate this organization. ठीक है, मैं नहीं rating देना चाहती क्योंकि मेरे पास कोई information आई है, and on that basis I feel like that if anybody who will go through this particular rating, he'll not be benefited too much, right? So I would like to withdraw that particular rating. So for that particular scenario, here SEBI clarifies that when you can withdraw the rating, right? The whole circular is about this कि कब आप rating को withdraw कर सकते हैं. Let us see that. See, ESG means environmental, social and governance. ESG rating help investor assess how well company follow sustainable and ethical practices. Now there are kuch clarifications hai. Let's see this. So SEBI says, so ESG rating providers, ERPs means ESG rating providers, if you are following subscriber pays model, for example, a mutual fund or an investor who has paid to the credit rating agency or the ESG rating provider that we want rating for this company, if that is the model where investor has paid, when you cannot withdraw, rating can be withdrawn only if there is no subscriber at the time of withdrawal. Right? If your rating, whatever company you have rated, is part of any index, you cannot withdraw the rating if the index has still subscribers. That means if the investor money is still invested, you cannot withdraw the rating. If withdrawn once, you should not reuse that particular rating, right? And if a company has not submitted its BRSR, that is Business Responsibility and Sustainability Report, you can withdraw the rating. Now, this makes so much sense. If the company has not submitted the base report, how you expect the ESG रेटिंग प्रोवाइडर टू असेस द कंपनी? अगर मान लीजिए आपने अपना टेस्ट पेपर ही मुझे सबमिट नहीं किया है, तो मैं कैसे असेस करूं कि आपने किस तरीके का लिखा है, right? So that is why BRSR is the base how the ERPs or the what you can say ESG rating providers assess the company. If that has not been provided, obviously ERP is very much allowed to withdraw their ratings. That is the number one point. Number two is if you are using issuer pays model where the company itself has paid you for the rating. So in that case, when you can withdraw? For securities. Suppose you have given the rating for a bond, right? In that case, you must have rated for 3 years. That means for at least 3 years or 50% of the bond tenure, whichever is higher. You have to provide the rating for this time period. You cannot withdraw earlier than this. Suppose if the bond has a life of 2.5 years, then 50% is 2.5 years or 3 years, whichever is higher, 3 years. At least minimum for 3 years, you have to rate it. You cannot withdraw before that. And before withdrawing, you have to get 75% bondholders consent by value. आपको bondholder का consent भी चाहिए होगा, because once you will withdraw the rating, the liquidity of this security will fall down, right? Nobody would be interested in buying this security. So that it's a problematic thing, right? And for issuers, ERB must have rated the entity for at least 3 years. If you have rated the company, so in that case, you cannot withdraw before 3 years, right? You should have rated the entity for at least 3 years before withdrawing. Now, that was the important 2 points. You have to remember only these 2 points. Now, there is some, what you can say, extra information. Like on ERP's website, that is a credit rating agency's website, you have to disclose name of company, sector, what is the rating, rating date, and what the report which has formed the basis. Stock exchange website may be name of the issuer, what is the symbol, sector, rating, date of rating, etc. You have to show. Now, next is Next circular is about timeline for collection of margins other than upfront margin, alignment to settlement cycle. Now what happens? Let us understand this. First of all, we have to draw the outline. Let's see and understand this. See, in stock market, you can do the trading in two ways. Number one is intra day trade, right? And number two is delivery based trade. Now what are these? Let's understand about it. Just a second. What paper you are preparing for? Obviously SEBI. We'll talk about these topics also, right? But obviously this is not the correct platform. What I'll suggest you is that what I'll suggest you is just drop a comment below this video and maybe we'll help you in written, right? Let's understand the circular now. So we have stock market based trading, intraday trade, delivery based trade. So what happens? Yes, SEBI guidelines are changing frequently. So what happens in intraday trade is on the same day itself, I'll have to do the trade and complete it, right? This is not going to go beyond one day. Fine. So, and in case of delivery based trade, what I'm doing is, hear me out. I go to Zerodha. Zerodha say, I am saying that I want to buy 10 shares of Reliance. Zerodha says, okay, pay us the amount. So suppose Reliance share right now is priced at 2900. So for 10 shares, I pay 29,000 and I get 10 shares in my demat, in my account, right? My trading cum demat account. Now this is delivery based trade where I have purchased shares, right? And this transaction was settled in T+1. T+1 means the day I have done the transaction, on the next day the securities are there on my account, right? Now next thing, do we require margin over here? Yes, margins are required but not that much. Here I am not interested in getting the security. I just want to make the profit by in the price differential, whatever price differential is coming. Now hear me out very carefully. In the delivery based trading, right now what I have given you the example was, I have given full money, I have got the delivery of shares. But over here, I can also do the margin based trading. Margin based trading means I told the broker that, listen, I want to buy 100 shares of Reliance at 2900, right? But I'll only give you the margin, right? That means suppose I'll pay you just 30% amount as a security deposit. And in the T+1 day, I will settle this transaction up. ठीक है, मैं इस ट्रांजैक्शन को सेटल कर दूंगी. सेटल करने का मतलब क्या है? I have bought and then whatever is the difference, I'll settle the transaction in the T+1 day. Okay, so over here you do not have to pay the 100% amount. You just have to pay the margin to do the trading. At one time you will buy, on the other time you will sell and you will just have to settle the difference. ठीक है, आपको बस difference settle करना पड़ेगा. Right, now hear me out very carefully. Brokers have been asked that earlier there were two kinds of margin basically. Number is value at risk. And next is extreme loss margin. Value at risk means because the stock price is volatile, so we will collect, let's say, 10% margin. 10% margin means contract value multiplied by 10%. Extreme loss means what if in the extreme scenario prices fall too much. So we will cover extra 7% margin also. So brokers used to collect these two margins before trade. ट्रेड करने से पहले ही ये मार्जिन्स ले लेते थे. एंड अदर मार्जिन्स, राइट, रिमेनिंग मार्जिन they used to cover in T+2 days. Okay, from the client. Now SEBI says that we have increased the settlement, we have reduced the settlement time. Now the settlement happens in T+1 day. So what the broker has to do? Collect these margins before trade itself and any other margin. For example, marked to market. Marked to market means if the prices of Reliance securities increase or decrease, accordingly, margin will also be adjusted, right? This is marked to market margin. So in this case, these kind of extra margins you need to take from client within T+1 day. आपको T+1 day में ही लेना पड़ेगा. No T+2 is allowed. Right? You have to take the margin from the client within T+1 day. These are taken before trade and any other extra margin whichever is left you have to take from client within T+1 day. If client fails to settle the transaction, I repeat, if client fails to settle the transaction, in that case, broker will bear the penalty. I repeat, broker will bear the penalty. Now, I am thinking, although none of you have said, but let me give you a clarity on this also. In delivery-based trade, there are two kinds of situations. Number one, I want to buy 100 shares of Reliance at 2900, right? And I have paid for that. Okay. I have paid for that. So the transaction is cleared. No problem. No, what you can say, issue in this, right? This is fine. 100% I have paid in one go. But imagine there is a second kind of transactions also. Suppose I have a derivative contract where I have to sell 100 shares of Reliance at 2930. So what I did, in the cash segment, I am going to do the trade for buying 100 shares at 2900. So see, I have done the cross transactions and then I will settle them up, right? So I have to do the settlement that for this transaction, I have to pay the amount within T+1 day. Yes or no? Correct? I have to settle the transaction within T+1 day. That means if I have said this is the price of the stock on Monday, by Tuesday, I have to give the funds to the stock clearing corporation. How much? 100 multiplied by 2900. Right? I'll get the funds from here and I'll invest in here. This is the situation. I'm giving you a perspective on how a client trades. Now, instead of giving the whole 2,90,000, I, as a client, can tell my broker that I'll give you 30% right now in form of margin and remaining I'll settle in another day, that is T+1 day. Client यहाँ पे कहता है, hear me out carefully. Client says to the broker that listen, I have to pay you 2,90,000. 30% of this I am giving to you on Monday itself, and remaining 70% of this amount I will clear on Tuesday, that is within 1 day. So now SEBI is saying that this margin or any other extra margin that you intend to take from the customer, you should collect it within T plus 1 day. Earlier it was T plus 2. Now they are saying that collect this within T plus 1 day. If the client fails over here and you have not collected enough margin, then there will be a penalty on the broker. Is that clear? I am hoping now it is clear. Right? I'll repeat it once again. So over here, there is a client who wants to buy 100 shares at 2,900, but he is not paying the full amount. He is saying to the broker that I'll pay you 30% in form of margin. Remaining 70% I'll clear within T plus 1 day. SEBI says, yes, it is fine. He can do 70% clearance in T plus 1 day. But as a broker, you should ensure that you have collected enough margin within T plus 1 day itself, right? Do not extend it in T plus 2. Reason, if you will delay and the client has failed to fulfill the obligation, the broker will be charged the penalty. That is the whole story, right? So let's see. So margin is the amount that the client must keep with the broker to cover the possible losses. So what was the earlier rule in the Jan 2023? So brokers used to collect value at risk margin, extreme loss margin. Value at risk means this is the normal margin that we collect because stock is volatile. Extreme loss margin is what if the stock falls too much? Extreme loss, right? So we try to create a buffer. Okay, earlier this and the other margins were collected within T plus 2 days. But now the SEBI has moved to T plus 1 settlement cycle. So that is why SEBI says that value at risk margin and ELM margin you have to cover upfront before trade execution, and any other margin which is left should be collected by the settlement day, that is T plus 1 day. That is the whole circular where they talk about. If the full payment is done by the client by T plus 1, there is no penalty. But if client fails to settle and broker also didn't collect other margins, then there will be penalties on the broker for the margin shortfall. Okay. So this was the whole story. This was the whole circular. I'm covering the circular in bits and pieces so that it doesn't become too technical for you. I hope you would have understood the circular, right? We'll have one more part for April and then we'll be done for the April and we'll start for May. So I have tried to keep it as short as possible. Please do read it for your upcoming examinations. Thank you so much for joining in and do not forget to like this video.